Hi, my name is Aman and I'm a chartered professional accountant practicing in the Metro Vancouver region of British Columbia, Canada. The Canada Revenue Agency can make assumptions about your income and expenses that you, as the taxpayer, have to prove wrong. One situation where this power to make assumptions often comes up is when the CRA conducts a net worth assessment audit. Well, a net worth assessment audit is a blunt instrument and the government is prone to maximize the taxpayer's income in most situations. Let's understand with the help of a real-life tax court case of Hall versus Queen. Mrs. Halls ran a restaurant with her common law partner, Mr. Like, called Roadster Smoking Gun Barbecue, or the Roadsters, which opened for operations on March 10, 2010. Unfortunately, despite of their best efforts, they could not make the restaurant successful. As a result, at the end of August 2014, they closed the restaurant. During the years in which Roadsters was in operation, Mrs. Halls consistently reported net business losses. The Canada Revenue Agency initially assessed Mrs. Halls for 2008 and then from 2011 to 2014 taxation years. From 2011 to 2014, she reported a loss. However, Mrs. Halls requested that the Canada Revenue Agency reassess her for the 2008 taxation year by applying non-capital losses back from 2010 and 2011 taxation years. After the reassessment, Mrs. Hall's returns were selected for review by the Canada Revenue Agency's Tax Audit Division. The Canada Revenue Agency decided to review her returns using the net worth assessment for the following reasons. Number 1. Restaurants tend to operate in cash. Roadster mainly reported business losses. The accounting records of the restaurant needed to be better maintained, and Mrs. Hall's personal financial records were not separated from the business records. Second, Mrs. Hall's reported income was not enough to fund her and Mrs. Like's lifestyles, even though they both lived relatively frugally. Following the net worth assessment, the CRA reassessed Mrs. Hall's by disallowing the non-capital loss carry back from 2011 to 2008 and then including unreported income for the 2011 to 2013 taxation years. It also disallowed non-capital losses for 2014 taxation year. Further, gross negligence penalties were levied for 2011 to 2013 taxation years. As expected, Mrs. Halls objected to the reassessment. The CRA confirmed her 2008 reassessment but reduced her unreported income for the year 2011 to 2013. It permitted the carry forward of non-capital losses from 2011 and 2012 to 2014 and vacated the gross negligence penalties for 2011 to 2013 taxation years. Unsatisfied with the CRA's decision, then Mrs. Halls appealed to the Tax Court of Canada. Turning to Mrs. Hall's case, Justice Maas held that she did not adequately show that the CRA's use of net worth assessment was incorrect. Since her personal and business records were not well maintained, she did not sufficiently demonstrate that the method was unnecessary. She did not raise any type of credible challenge to the method used by the auditor. Also, she did not challenge specific aspects of the net worth assessment. Rather, she just challenged the method on a general basis, which was not sufficient in this case. For these reasons, Justice Maas held that the CRA's use of the net worth assessment method was justifiable and that Mrs. Halls failed to demonstrate the incorrectness of the CRA's assumptions and conclusions. So friends, the key takeaway is that the best way to avoid getting stuck in this tax trap is to ensure that CRA has no reason to think that you are not truthful when filing your taxes, and that you keep accurate and complete books and records, and that you are actually filing your taxes and are also doing it on time. If you are faced with a net worth audit or have been given a net worth assessment, get a team of chartered professional accountants and a lawyer in your corner. Early involvement is always best, but there is always time to get someone on your side. If you want to be notified about my new tax videos, please consider subscribing to my YouTube channel. Thanks for watching, and I'll see you in my next video.